Guy Keller, how are we, sir?
I'm very well, Matthew. Back safely at home after a few weeks on the road.
Yeah, that was tiring, right? That was a long,
it was good to be able to
road show.
Like reach out and touch you with that nice woolen jumper you're wearing at the Uranium event too, in person for the first time, which is nice.
Please expect a restraining order. Right. No, it was a good night, actually, and that's what I wanted to kind of catch up with you about. You got a chance to meet lots of fund managers, lots of big institutional potential players and analysts and so forth, and of course that night at the Uranium shindig at the pub, you also got to meet people who on the ground working and operating these projects. What was your big takeaway from Peter?
Oh yeah, I mean, so it was great to put a face to names basically, and people on Zooms and the other end of after 6 years of investing in the space, meeting a whole bunch of people again. So I mean, there's an excitement, but I think there's a recognition that there's a lot of work to be done. A lot of work to be done. We just need to keep that focus and keep some of these CEOs a little bit, not getting too far over their skis. Let's not go out and try to grow for the sake of it. Let's focus on accretive ideas. Let's keep an eye on the projects that you have been telling me for 6 years are important. And then at the junior end, remember those that have got a real project with a real team and good backing, to make sure they don't get lost in the noise of all this. I mean, I don't know how many you met, but I met a few lithium players that have picked up uranium and Athabasca and gold and rare earths, and a few that are reinventing themselves, and there's a couple down here in Australia as well. Not saying that they're necessarily bad projects, but there's going to be a lot more of them. And I think it's just really this year's going to be a year of just focusing in to make sure that where you're invested is the right place to be, I think.
Yeah, well, so a few of those used to be a nickel company, used to be a gold company, used to be lithium, now trying to be a uranium company, because that's where the focus of attention is. Because I think one of the things that I took away was the amount of kind of big money looking in, leaning in, and of course I think was with Fidelity kind of jumping into Paladin recently, it suggests that people are paying attention to the thematic.
And it's incredible, right? That's $300 million of Paladin they've bought, 8% of that company in the space of a week, when all this fast money is exiting because of a silly move in the spot price. I mean, I was in BMO conference before PDAC, and again, the global funds were there and they were meeting the uranium people. And there was a few that were, wanting to get upskilled. So the SPUT guys definitely reported that a lot of their meetings was, explaining the thesis and also answering the question, what next apart from Cameco? Because, some had been sitting there. It was a good trade last year if you're in it. Easy trade from the BN. February has given them cause to, but it was great to see that some of these big global funds are not scared of some of this silliness in the spot market, that they see the wood through the trees and they're prepared to put, that's a serious amount of money, $300 million into one stock. And I don't think it stops there. And certainly, as I said, in some of those discussions in Florida and Canada, it appears that there's a lot more eyeballs outside of the fast sort of money we've seen in January, a lot more eyeballs looking at this for a lot longer term trade.
Right, but for those guys, for the Fidelities of the world, and there are obviously more than them just piling in at the moment, they need the liquidity. And I think Paladin is one of the few, probably a handful of uranium players which got that liquidity. They're playing the theme. They're not necessarily playing the ball or the company. Yeah. They've got to play that theme, and because if they're looking to dispose of this thing, they've got to believe there's a long way up.
Yep, that's true. I mean, it's as you said, it's always, resource stocks are always easy to get into. They're not so easy to get out of, especially if you're trying to get out of them at the same time as somebody else, and that's especially relevant for uranium, as we've seen post Cameco quarterly in February, where some of these stocks have had a pretty brutal move lower because just weight of money trying to get out. So yeah, I mean, it does, these guys aren't silly, right? They may not be in the weeds of the uranium trade. They may not fully understand how the market prices or works, but they definitely would have looked at the time horizon in which they want to be here and looked at liquidity as a factor of that, a function of that equation.
Right, and I think, and for the big guys, like you say, that's was great for the sector. I think it's great for the sector because it kind of shows that the big safe money's in there. It's kind of good for, I say this at the moment, a couple of handfuls of company being the beneficiaries of this. But if I'm looking at the kind of next rung down from the Fidelities of this world, looking to kind of get in, and I used to be one of these guys myself, I'm trying to work out, how do I price this thing? How do I value this thing? Because you've got again, maybe a couple of handfuls of advanced developers who are at that point where they're looking to get term contracts on board. Term contracts, it's a fairly quite opaque sector as it is, but pricing of some of these term contracts is not available. How would I, as a banker, evaluate a company? Can I evaluate it? Because the utilities are saying, well, actually, no, this is not something that we want public. If you want to do this deal, you're not going to be able to, announce what the terms are. So, how do I factor in all of that?
Well, this is one of the frustrations that a young analyst at a global fund shared with me when I started trying to peel back the layers as to how they're looking at it in a conversation over a beer at one of the conferences. And I go back to these developers and I say, look, you keep telling me this is a seller's market, that you have the ball's in your court with respect to utility contracts, as long as you can get them comfortable with the fact that you are a near-term source of supply to them. And yet you always sort of sit back and fall back on their commercial and confidence. And, the reality is this is a small market. If Duke does an RFP with a developer, the whole market finds out. Like they all know. They don't want to talk about it. But the fuel buyers know, the brokers know, the traders know, I find out, therefore the other utilities will. And, if we want to be taken seriously as a sector, as I said, this analyst said, we find it extraordinarily difficult to model cash flows because we don't know what price to use. This developer tells us they've got a blended floor and ceiling, but we don't know what that is. So we either have to try to use the term price, which we know is not necessarily a great reflection, or the spot price, which we know is volatile. Why can't these developers turn around to these? I mean, do you honestly think Duke's not going to give you an RFP because you go out and say, I've just signed £400,000 a year, 26 to 34, with an 8120, floor and ceiling. You can leave out whether it's fixed or base escalated in the middle, but just give that range. And, yes, it's a broad range, but it's going to give analysts at these generalist funds more confidence in how to take a uranium position to their boss and compare it to a copper or a lithium or a nickel or something else, right? And as I said, I know 8120, at least you know the worst case scenario, you know the best case scenario for that amount, and it gives you a better ability. But, why can't we do that? What's the worst that's going to happen? They're not going to walk away if you're telling them that you can give them £400,000 a year in 26, because there's not many people that can do that for them.
So where would you put this? Because I think in recent conversations I've had with some other commentators in the space, like last week, saying we've always talked that it has been a buyer's market, but it's moving towards a seller's market. But it kind of feels like we're in that kind of hinterland at the moment where we're still trying to work out where the power lies. Do you have a sort of sense of that at the moment?
Wow. As I said, the developers all tell me the power lies with them, but then, the power probably lies with them on pricing. But the other thing that annoys me as well is that these utilities are saying to these guys, okay, you're 3 years away from production. I want to sign something now, and the developers are signing it. And again, like, why? If you really do, if the ball's really in your court, again, if the utility has done the work on your ability to, like, if they've decided that they think you're going to be able to produce from whatever mine it is that you said you're going to produce, why does it matter if you say now to them, it's going to take me 2 years to build my mine? Where's the term price going to be in 2 years? I mean, as we've seen, we were in, November last year with the price in the spot price in the 70s, the term price in the mid 50s. And in 2 short months, we went to $106.75. And in fact, you'd probably argue that the floor is being negotiated higher than that in the 80s. And, a developer is going to bow to the pressure of a utility to sign something now for something they're going to do in 2 years. Wait, you've proven they've done the DD on you, the due diligence. That ain't going to change because your mind's not going to change. You're going to, the power is with you. So those telling me that it's a seller's market, they're not, the rubber's not really hitting the road with their actions on that. They seem to be still sort of, it's like the kid in the corner who hasn't been asked to dance, and suddenly the cute girl comes up. And, oh my God, there's still a little bit of that. Oh my God, the utility wants to talk to me. So therefore I better do what they want. No, wait.
Yeah, after years of abuse that were being ignored at the school dance, I'm not surprised. They're not quite sure how to behave, right? So that's fair enough. But look, I've labeled it as a pregnant pause that we're sort of in the sense, and maybe I'm wrong with that because it hasn't just paused, it's reset. We're sitting here at sort of high 80s at the moment, having hit 106. What kind of damage has that done for people looking into this space? That reset changes people's minds and opinions about the trajectory. It changes people's minds about the control factors and who influences it. I mean, how are you reading it?
Yeah, I mean, it's moved on fast money and those in for a trade. But, they're always going to move. I mean, we saw it with Cameco. It didn't matter what Cameco put out in February. Didn't matter. The market had it in its head that it had done enough and it wanted to sell. So it sold. Then we have these spot games around pricing, some pounds that were very well telegraphed, and the thing drops on zero volume, trades 100,000 pounds, then the business clears and suddenly we bounce. And again, because of that problem in investors can't see what's going on in the term market. They can't see it. They have this term price that guys like us always say is a rubbish price. And they go, well, what else are we supposed to look at? Spot. So, look, it's shaking money out, but I think for the most part, most of that relevant money made money out of the trade, right? So they might have got burnt for that 10 or 20% as they missed that top. But, there are a lot of people in Cameco for some or all of last year, and that was up, 90-odd% or whatever it was over that year. So, I think for the most part, I mean, you're never going to keep everybody happy. There's always the investor that bought the top in February and wore 20%. But I think that money that is coming in and out of this, maybe it's come out of lithium or wherever it's moving around, it for the most part had a good experience, and they're momentum sort of traders, and that's what the feedback I was getting from PDAC was, what type of hedge funds are in this trade? Momentum guys. They were chasing that momentum. The signal turned, they got out. No harm, no foul. They're not taking it personally. They made some money. If the momentum's right again, they'll come back in.
So what's going to be the key driver? Because I think that kind of reset moment was attributed to Japanese traders sort of dumping £100,000 in the market at a $7 discount because they need it. They've got their own drivers. That's what I'm going to say. General concept. That's what the rumors are. It's a rumor.
Yeah.
There's no facts. But if something as small as that can drop the market that quickly, is that what these momentum players look for? There's no way they can get ahead of that. So, what's the next thing that's going to hurt the market price-wise?
Yeah, I mean, that's unfortunately it. I mean, I spent 20-odd years trading physical commodities and commodity derivatives before I moved into this part of the business. And this is the most dysfunctional commodity market I've seen. And I've seen quite a few markets of dysfunction. There's some very nice people in it, in the physical market, and you've had a few of them on your show. But it's dysfunctional. It does not, the ability to move that price around. Any futures market you look at, even in liquid ones, you can see what's the bid ask now, what was the last trade. Whereas this market turns around and says bid asks down here, and also how much is traded. Even in swap markets, you can get an idea of how much is traded or where there's a physical reference. Is this market, it comes down from 92 to 86 on zero, and they go 84, 86, last price 85. So the market says, oh, it's traded at 85. And a handful of people turn around and say it actually didn't trade. So, there's an onus on, in a way, some sort of message to brokers to say, report it better. Give us the last trade and give us some volumes. That brings a bit more transparency back, because this is not a market where utilities are in every day buying it. Then it's not one of those markets. I think whatever the stat is, it's 60 or 80% is just churned around between one hand to the other. Somebody's got some selling. They know it's coming from the Uzbeks, or it used to be BHP back then. And now it's been some other Asian material. They see it coming, they march it down. In this case, they marched it down $10, printed 100,000 to say they're traded, and now bang, that business prints. But to the point of the equity investor, that's what they look at, because, that's the only thing they can observe on, you can sit on Bloomberg now, the uranium price. You can't see a forward curve, or you can't see last trades or last contracts that are done.
So I think it's John Ciampaglia said, there's a buyer's strike on at the moment. The utilities going, well, hang on a sec. There's this, look at all this price movement. Not quite sure what's going on, which suggests they believe that they still have the power. The buyers have the power, because we're going on strike. We don't need you as much as you think we do. What's it going to take for them to see or believe to actually start participating again? What are they waiting for?
Well, you could argue the flip side. There was a seller's strike in December from 80 to 106 as well. And again, I don't think people need to believe anything. It's just what the flows are, what the sentiment is, and what the expectation of future business is. If that discount to the NAV on the spot or yellow cake was to yellow cake's a bit harder because I need to raise, but if the discount to NAV was to shrink from the 6 or 8% of wherever it is now to 1 or 2%, then physical buyers step back their offers, because they go, whoa, we're one US trading session away from these guys creating shares, getting the cash and coming in and buying the uranium again. And so I know there's funds looking at that. I know there's players who are commentating on various media about that. And at the same time, it could be as simple as a utility saying, oh, okay, you know what? I had board approval to buy some material at $80 in November, and I missed it. And it's now back at $80-something. I'll go and buy a couple £100,000. And the moment they step in, whoosh, up it goes. At $106, we had 3 North American developers that we know of claim that they'd sold, 1 or 200,000 pounds. And that was enough to completely stop the momentum. Because again, the flow came in, buyers stepped back, utilities were in shell shock. Same thing happens on the other side. Utility steps in, Cameco, Kazatomprom, whoever it is, Sput. Doesn't need to be very much to, and that's why it's such a dysfunctional market.
Well, it is, but I think it's the thing that amazed me was you had the Kazatomprom sort of, well, I Cameco to a degree, some not mixed messages, but certainly confusing messages in the marketplace. You were saying, well, perhaps it didn't matter what Cameco said. I think it did matter what Kazatomprom said, because there was a market reaction to that, right? So do you think that the thematic, if we look at Fidelity jumping in, the thematic is going to override what individual companies do or say going forward?
Yes, at the larger end of town. Yes, there will be flows of money that come in on a nuclear thematic or even a fundamental thematic.
Energy security we're talking about here, right?
Yeah.
Right,
yeah,
okay.
Exactly right. And, I note that Cameco left BMO and went to an energy conference straight afterwards. And that was at the invitation of that conference host. I can't remember who it was. I think it was Scotia or something. And they spoke there at an energy conference. First time they've done that. And that was something I flagged to them last year with the Westinghouse acquisition. I said, energy transition is now a big green tick because of what Brookfield Renewable have done in their stake in Westinghouse. And so therefore, energy as well has been a focus of that. Start doing these things. So, they went off to one of those energy conferences. I still think they probably need to market with a Westinghouse person as well, to really give that whole thematic of energy transition and energy security and that whole vertical of the sector. That would be a really powerful story, but they'll get there eventually. So yeah, I think there's always going to be that money that coming in now on that thematic. Further down the capital stack will be, the kids jostling in line to get attention of the teacher, right? Because, that's going to be a little bit harder because that global money won't filter down that far. So you'll have to get more specialist type resource investors or energy investors looking at that and saying, there's a trade here that's going to give me more turbocharged than owning Cameco.
Well, let's talk about the kids for a bit. Like I think noticed this morning, Bannerman put out a release about the options available to them. You've got UEC talking about getting a production in August. You've got, we spoke with Bill Sheriff, and in fact, I think you and I met lovely Janet Sheriff, and when we were in Toronto. Yeah. So there's and your energy and all that. There's a bunch of guys who have started the process of getting into production, who are very close to getting into production. I would say with the Bannerman thing, they've got optionality as to when they press the button, as to when they decide they want to move forward. You saw what $250 million raised by Deep Yellow, or sort of announced last week. It's really starting to move. The kids are jostling, and they're getting noticed for sure. They're going to have to deliver though, right? This is down at this level. It's not a, as you say, thematic driver. It's you're gonna have to show people you can do what you say you're going to do. So again, out of those players, who are you looking at? What are you expecting from them?
Well, I heard Brandon on your show the other day, a couple of days ago, and like what they put out today is shrewd. I mean, when we first looked at Bannerman 7 years ago, at whatever it was, 4 cents, when we picked up that line of stock, they had the bigger Tango project, right? And big CapEx, and everyone was sitting there going, wowzers, that's a massive amount of money that a junior's got to raise for that. They were shrewd. They brought it down to a Tango 8, bite size. And I think what they've done, today with showing that either you can produce more or extend the mine life, I think that's really relevant. And it's relevant when you look at, especially, Cameco with their ISR assets in United States, put it out to the market. Does somebody want to buy them? Big reclamation liability on that. We're seeing a process with Rio with some assets in United States as well. Reclamation liability on that. And so when you look at some of these guys saying, I've got 5 really small projects with 8-year mine life, a couple of £1 million, and you sort of sit there and you say, if you're in a jurisdiction where you're going to have those reclamation liabilities, something like what Bannerman's done there, where, extending that mine life instead of buying something else, is smart, because it's that one site that whole way through. It's that one set of infrastructure. You see it with Boss as well, building out their satellite potential there. So they're in that one place. They're not having to worry about remediating, multiple sites. And I think that was one of the takeaways that I got when you're looking at, nimbleness of a project versus something like the Bannerman, which is a large earth-moving operation at lower grades, versus very high grades in difficult, geography in the Athabasca. There's all of these trade-offs there that say sitting in one spot for an extended period of time and having ability to react to the market is maybe there's some more value in that than people want to, they get bright shiny objects of project builders.
Yeah, so you remind me of some we talked about maybe a couple of months ago now, which was sort of that reclamation cost and liability. Cameco, I think, they had about $180 million bond on some of their Wyoming ISR projects, which was perhaps why some of those projects are being touted around. Well, how do we get this off our balance sheet? These days, actually, they're probably thinking, well, we don't need to tout that around anymore, and potentially there's something to be done here. Because if I look at Wyoming, there's so many projects there, ISR projects there. But lots of bitty, tiny little assets, which might be £500,000 here, or maybe if they're lucky, £1 million. Do you think that there needs to be? We're probably a bit full circle here. Do you think there needs to be some sort of consolidation in different parts of the world? We're sort of seeing it happening at the basket. Does it need to happen down in the US?
Well, you would have had exactly the same conversations in Toronto as I did. It's like Game of Thrones in the United States. There's all these kingdoms with all these outposts everywhere. And I've said to a few of them, I said, you need a conclave. I need to lock you in a room with a map on a big board table, and you're going to leave your little chess pieces and work out your asset swaps, work out your joint ventures, come out with, I don't need one person sitting on the Iron Throne, but I need, kingdoms all, consolidated, because there's so much of that inefficiency because of a decade plus of tenements dropping and people saying, oh, I remember that, I'll pick that one up, and then somebody else, and I'll wait for them to drop that, and they don't because you've got this one. And, it really is there's a few egos in the room. There's a few egos in the room.
Everyone dies on Game of Thrones. Everyone dies, just so you know. Just want to say that. Not a good analogy.
True.
There is that. No, but I know what you mean. It's kind of like it's like all these little fiefdoms. They're just in themselves, each trying to persuade the market that it's big enough, it's going to be good enough. It's like, and it's like if you're the U.S. government or the U.S. Department of Energy, you probably would quite like it if someone came along and just swept it up into one nice, tidy little package. And likewise, maybe there's some deals to be done down at this level, because I think it would kind of help work out which projects are real, because I've described a couple of them as sort of, two men and a wheelbarrow, but they're out there in the market pumping the story. Whereas you want to know, what's real and what's not. Because I think that what I see coming up, anyway, I know you'll agree, is as per last cycle, as per lots of other commodities where it kind of is on the up. Huge amount of white noise coming down the line.
Oh, yeah.
Huge amount of opportunity and a huge amount of people who are going to lose a ton of money.
Yeah.
In equal measure, right?
Oh, I mean, in PDAC, I was introduced to somebody I'd never heard of who's got a uranium tenement. People are saying, why don't you know about this? Down here in Australia, there's people calling me up saying, I've just bought this stock for a PA punt. I go, what do they do? It's like uranium. I say, wow. And I'm in the weeds. It's coming already. Yeah, it's definitely. As we know, there was 500 opportunities last cycle. 400 of them were not investable if you've done any work on it. But we saw the same thing with lithium as well. 1,000 lithium companies all turned up. Rare earths. Oh, I got rare earths. Now it's copper. There's all these people we're drilling for copper in Australia. Okay, great. You'll find some, but it won't be economical. Yeah, it's gonna be a lot of little asteroids to dodge for a better term.
But you can't afford to do that, though, right? You as a fund and who've been there, you've learned a few things along the way about what's more real than the next thing. What would you say to? I know you're up at the institutional end, but what would you say to retail? You've got PA. What would you say to retail boys and girls looking to invest in this space? What should they be going for?
Buy the ETF. I mean, it's a lazy response, but you're going to save yourself some heartburn, right? And if you then decide that you want a bit of turbocharge, buy one or two little things, but make sure it's somebody that's been around last cycle or a project. Google the project for a start. If it had some historical drilling on it last cycle, maybe, but the real essence, and I saw a presentation when I was in North America, about how it wasn't talking about uranium per se, but they were talking about sort of resource exploration, and some of the really good success stories have been generated out of stables of they've come out of a group of established investors, whether it's some of the next gen sort of through ISO Energy, through some of those, they've come from a company that's got balance sheet, keeps a big shareholding in the spin out company, participates in every equity raise, at least for pro rata, provides the expertise of their geologists and technical people, for those juniors, those sorts of, sort of spin outs, I think, and you've seen it across anything that Pierre Lassonde has done, or the Lundin Group, or Rick Rule, when see was some of the things he was doing. Those sorts of where it's a good promoter backing a good project and providing more than just capital in a quick trade. If you can find those, and they're around, they are around, they're going to be the ones that next time they raise capital are going to be able to not go to some fast money hedge fund in Hong Kong and have to hand out half their bloody register in warrants, Like, they're going to be the ones that say, our 40% shareholder is going to cornerstone this deal and provide us with the rig that they're not using, and this, that, and the other. So there are going to be those, no doubt, because we've seen it in other commodities. But there's going to be a lot of train wrecks around as well.
Oh, for sure. And do you like what you're seeing in the Athabasca at the moment? In the sense of there's a bunch of roll-ups, a bunch of new companies who are, if I look at Atha, for instance, their acquisition, well, I think you've got the Latitude bit over the land, but the 92 Energy to come hopefully at the end of this month. Stuff like that, what Dennis has been doing, what UEC's even been doing, and the Consolidated, etc.
Yeah.
It feels like the finance bros are out doing deals, but possibly what the sector needs.
Yeah, well, I mean, over my shoulder there is my map of the Athabasca Basin that I put in an old frame. One of the good things about having that is that now almost all of the Athabasca is staked and all of the fringes are staked. And I think the statistic is that more land in the Athabasca was staked than at the peak of last cycle. So what does that tell you? That tells you there's going to be a lot more spin outs, a lot more earn-ins, a lot more IPOs, a lot more shells, which is going to drain that pool of available capital. So every single person spinning out an earn-in on a non-core asset. I mean, one guy I was chatting to said, I'm spinning this thing out and they're raising some money. I said, yeah, I know. He said, how? I said, they're calling me. I've never heard of them before, but they're calling me. He said, why are they calling you? I said, because I'm a uranium investor. Of course they're going to. But how do they even know who you are? I'm like, well, because I go on Matt Gordon's show. But, and I said to this guy, I said, that's an asset that you've never mentioned in any of your slide decks. You're now selling me that, how clever am I? But you've just diluted your pool of available capital because they've gone and raised, and they're calling the same people that you would call when you want exploration dollars. So to that point of what you were saying, if you got the ISOs or some of these better capitalized companies, pushing exploration around the Athabasca, go for it. If you want to punt, stay away from the deep stuff unless you really got some faith in what the team's doing or how they're doing it. I mean, that ambient noise technology that ISO are trialing in the current drill program, that's going to be really interesting to see what that does for exploration in the Athabasca. So, and again, those are tidbits you pick up in person as we did in Toronto. I hadn't really thought about that too much until they said, we did that survey over where we know there's uranium, extended along the conductors and the fault lines, and guess what? We found the same little pretty colours. I don't know what they mean, but I just know they're pretty colours. And so we're going to drill there, and every explorer you spoke to in the Athabasca is sitting there saying, if that works, we're going to do that. So you then turn around and say, who else has done it in the Athabasca? And so who else is going to be able to capitalise quickly on that? There's one or two that have. There's 10 that are lining up to try to do that if it works for ISO. So there are a bunch of those sorts of things where being there in person, you pick up this sort of stuff in conversation. And then that's the question I was asking every single person that was exploring. Have you got access to it? Yeah. If it works for ISO, then we're going to do it. When? How have you got it booked? How have you paid any money? What are you going to do when 9 other people all rushing for the same thing? But, and that all comes about from just more activity, right? Human beings are good at sort of trying to solve problems, hopefully. We don't want them to find too much uranium there because the supply then solves too quickly for the trade.
No, I think there's a conversation around taking the jetty, the Newton as you say, and technology. Yeah, I'm super excited. That was, again, one of our kind of big takeaways there. We kind of walked the floor and was talking to a few of those people. But just taking with Athabasca if I can, because I think what we've also seen in Athabasca, and I think there's about 3 companies that are there, is they've tried to make a discovery, couldn't raise any money, had to do something to survive, so they've become prospect generators, right? That's where they've had to go. And nothing wrong with that. I just think it has a very different return profile and timeline to regular, exploration companies who succeed in making a discovery, But it reminded me how goddamn hard it is to actually make a discovery.
Yeah.
And I think that's possibly, if you're, to your point about maybe people should invest in ETFs, I agree. For the vast majority of retail, ETF, go to an ETF. Okay, some people who know perhaps a little bit more, who do a little bit more work, a little bit more plumbed in, can help you kind of get this sort of blended approach to returns in uranium. If you are, however, needing to get that turbocharged, to use your phrase, then do you listen to what Guy said with regards to the things to look for, because it's goddamned hard, and most of these guys jumping on the bandwagon will absolutely blow your money away. So it's tough.
Yeah, I mean, like the perfect example is you look at what Corey did with Alaska with that intercept that everyone was talking about when we were there, and that was their 84th hole. I can't remember. MacArthur River was found on the 121st hole or something ridiculous. Arrow was a few less holes, but there was a lot of work done. Yeah, and I mean, look, the prospect generators, those who are still focused on a core project, and they're using some of that cash flow that they're getting from the vend out to help fund that, I don't mind that. It's proactive. Those that are just vending it out and sitting there and hoping somebody else does the work for them, a little bit harder to swallow. Because, it's you've got to, although when NextGen came out with that whole 3.5 kilometers away the other day, you're like, well, maybe it is easy. I mean, assay's still pending, of course.
Assay's still pending, of course. Well, I mean, we've had a good romp through, what's been happening in the market, and maybe some of the whys. And in the next few weeks, we'll unravel again, and maybe some price discovery, and we should catch up and talk. See how right we were.
Yeah, well, like the ETF's going to rebalance on the 31st of March, and I guess it's the week before we find out if there's new names coming into that and what the impact will be. There's been a sort of a reset in some of the bigger names, I guess. So do some of the smaller names get an uplift? I mean, regardless of what happens, those ETF rebalances always end up seeming to be net buy flow at the moment. And for some reason, it seems to catch a lot of people out. And they sit there and go, wow, what happened on the last day of the quarter? So, I mean, let's hope it's net buying. I mark quarterly, so it'll be good for me. And then I think we just we get into March, or in March, get into April, and I think, we just start seeing a little bit more utility sort of get comfort, and I think the spot prices grinds back higher again, because, there's no reason that it was down here apart from the silly games. And as I said, I feel that there's going to be a little bit of cyclicality coming into broader resources, and I think that will spill over a little bit, But again, I get paid to be, basically long uranium, so maybe, and I can wear the volatility, right? I can sit there in February, have the bag of popcorn out, watch the selling, and yes, it hurts, and I say that flippantly. I've got a very large investment of my own in my own fund, so it hurts me just as much as it hurts others. But I just have that belief to look through that a little bit and say, well, these are commodities and these are junior commodities, or junior resource stocks. So, when do you start buying? And that was a decision I'd sort of made last week. Now's the time I've sat here for a month and a bit. I've got some money in the things I like. There's no reason, if I like them up at whatever price they were in February, then I should like them at what price they are down here. So, but yeah, you've got to be patient, and you can't panic, but you also have to have your own investment horizons and in mind when you do that. Mine are long term. So I will be here next time you want to speak to me, is what I'm saying. I'm not running away from the trade.